JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 17th of September 2020. So yeah, welcome everyone. Welcome to this Thursday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So also, just before I kind of continue, just a quick update on the videos. I mean, tomorrow there won't be any Traders Espresso nor Tea Time video, so yep, I will resume on Monday. So just to kind of let you know, but later on today we will still have the Traders Tea Time, where I'm going to pick up on some of these instruments. Now, the first one I want to touch on here is the Nikkei 225. Again, quick update, because not much to talk about here, because the same idea still remains. That on one hand, although it's struggling to overcome this 23,580 zone, on the other, it still remains above this 21-day EMA here, shown as the yellow line, which still kind of suggests that there is a hope for the buyers and they could push the index higher. However, we would still need to wait for that confirmation break above the 23,580 zone, marked by the high of the 3rd of September, or in other words, the current highest point of September. Excuse me. And then yes, we could aim for some higher levels. Ideally, we would prefer to see a nice daily close above this area. But of course, we'll go step by step on this one. For now, although we are seeing the index being a bit in the red, still there is some hope for the buyer still, as long as the price continues to balance above this 21-day EMA. If it drops below this is where we will become a little bit more neutral, and then I'll have to pick up on there, because at the moment, basically, previously I looked at this downside line, but to be honest, it's probably time to update it. And if we can draw here a short-term upside support line like this, basically this could mean that if we get a break of this 21-day EMA, a break below this 21-day EMA, and a drop below this upside line, then there's a good chance for this index to drift lower. However, if you want to be a little bit more on the safe side, you could keep an eye on the low of the 9th of September, or in other words, the current lowest point of September, near the 22,878 zone. And then yes, lower levels could be met if we get a break below this level. But lower levels I'm talking about in the short run, so don't forget about that, because still we are still trading above this 200-day EMA. So in a way, a move towards that line could be possible, and then we would take it from there. Shanghai Composite is trying to make its way higher. However, it was initially trading well in the red. The index still has around 15 minutes left of trading, so keep your eyes on that. And at the moment, to be honest, we're a little bit more on the neutral side, although it is trading below this 21-day EMA, which kind of suggests that there is a possibility for this one to move lower. The index failed today to drop below one of these levels that I talked about recently, this 3,238 zone, and then it failed to do so, and then kind of reversed back to the upside. However, in order to maybe get a little bit more comfortable with slightly higher levels, I push back above this 3,336 zone would be needed. Until then, we're just going to continue observing the price action here, because it's a bit too tricky and too tight here, and that's why we'll rather wait for that confirmation breakthrough one of these levels that I just mentioned. Now jumping into the German DAX, and as you can see, the 21-day EMA continues to act as a good area of support, although we didn't really quite reach it. Nevertheless, you can see that the index yesterday pushed higher. However, if we take a look at the cash index and where it's currently trading at, we can see that the price is currently near the 13,072 zone. So basically got pushed on the the German cash index here, and the German DAX cash index got pushed to the downside after hours, together with the U.S. equity markets. So you can see that basically the price right now is near this 21-day EMA, shown as the yellow line. So in this scenario, basically we're going to be very careful. So we'll have a nice opening gap here to the downside. However, be very careful near this 21-day EMA, and so far I would say that this scenario that I talked about from the beginning of this week is working out nicely. So what I was saying, that if this 13,314 level continues to provide decent resistance, and we could see something like this, where we could see maybe a drop lower, tested the lower side of the rising wedge, and if it provides support again, we could see a nice rebound and a push higher. Now, of course, don't get me wrong, what I kept saying as well, that that these patterns, these rising wedges, tend to break to the downside. However, in order to consider that scenario, in order to consider this idea, a break of this lower side of the rising wedge is needed. If until we don't see that break, the price could easily continue moving inside of it with a small incline to the upside here. So so yeah, guys. At the moment, basically, we will have a nice opening gap here to the downside. Keep your eyes on the 21-day EMA. If it does provide support, then we could see a nice rebound here and a push higher, but still probably to be a little bit more on the careful side. The break above the 13,314 level is required in order to get a little bit more comfortable with the upside. But if it does continue sliding here below the 21-day EMA, then, well, keep your eyes on this lower side of the wedge, and then of course keep your eyes if we're not going to break it. If we will break it, well, I mean, like I said, maybe it's going to be a nice feast here for the bears. DXY. So DXY is popping higher, and you can see that yesterday basically got boosted by the FOMC, so you can check out the details on their web page here. For example, the Federals and read through the statement to keep an eye on it. So basically, you got a boost. The dollar, you got a boost from the FOMC, and yep, you can see that we're now trying to make its way higher here again, although, as I've mentioned to you guys previously, that still keep your eyes on this barrier, the 93.81 territory, because and we would like to see a break above this area first, just to be a little bit more on the safe side in order to consider a bit of a larger correction to the upside. Now, the reason why I'm saying correction, because we're still trading below this downside line taken from the high of the 23rd of March, and also, as you can see, by the way, the upside idea here is still supported by our oscillators, the RSI and the MACD. Both are rising, and well, I mean, for now, kind of. Yes, there is a possibility for this one to move higher. I'll get to some of the dollar pairs right now, but at the moment, guys, still be very careful. You can see that, for example, here, the pair also on the 9th and 8th of September, the pair also tried to make its way higher toward this level, but failed to do so. So maybe the second time will be a lucky one, but still, as I said, a break above this 93.81 zone could do the trick for more buyers. Jumping into gold very quickly, and gold, as you can see, has a direct effect here from the US dollar, and it's pushing lower. So the US dollar is strengthening, and gold is breaking this upside support line taken from the low of the 20th of March. Now, this is what I kept talking about in the past few videos where I was covering gold basically, and what I was saying, that if this upside line gets broken, then there's a good chance we could see this one drifting lower. However, we would prefer to see a nice daily close as well, because as you can see, when we had these breaks here, neither of the daily candles kind of remained below this upside line. So if we get a nice daily close below this upside line and also below the 21-day EMA here shown as the yellow line, if you can see it right here, then there is a good possibility we could see this one drifting a little bit lower, maybe even going towards this 1901 territory that I kept talking about as well, because a nice good drop below this area could open the door towards much lower areas, guys. So that's why be very careful for now. Yes, it is showing signs of weakness a little bit, the commodity, but wait for that daily close here, guys, and then we could maybe try to take advantage of this move lower. But again, for now, we cannot really we're probably going to stay cautiously bearish, just to be on the safe side, because just in case there will be a surprise later on, some sort of. So but in order to consider the upside here on gold, well, wait for a push of the 1972 level here, which is currently the highest point of this week, and then aim for some higher levels. Jumping into Brent oil now, I haven't looked at this one for quite a while, and probably let me just clear up this chart a little bit. Now we'll have a fresh start. So if to stay away from some of the lines first for now, we can see that after the commodity failed to move above its 200-day EMA, or should I say move further away from its 200-day EMA, it drifted back down, dropped below all of its EMAs, and then kind of it found resistance right now. Not this, ooh, not this one. Where's that horizontal line? There we go. So after finding good resistance here near the 46.50 zone, which is the highest point of August, the commodity drifted lower below all of these EMAs and found support near this 39.34 level, which, as you can see, acted as a beautiful area of support from where the price rebounded and made its way higher. However, it got held near the 21-day EMA and near the 100-day EMA, here shown as the yellow and green lines respectively. Now it got a hold up here. Of course, all this is still slightly on the bearish side, but to be honest, ideally we would, in order to consider a move lower here, well, a drop below this 39.34 level would be needed, because this was a good area of support. We need a break of it in order to aim for lower levels, because such a move would confirm a forthcoming lower low, and then we could target the low of the 12th of June here, and near the 37 territory, somewhere around there, or we could continue going further south towards the lowest point of the lowest point of not the lowest point, the low of the 22nd of May near the 33.57 zone. But again, as I said before, we need that confirmation break here below this 39.34 zone, so keep your eyes on that one. In terms of the upside now, with this one, I would need to see the commodity jumping back above this above the 21-day EMA here, in order to maybe consider a bit of a move higher towards this 200-day EMA. So I'm not gonna basically spend too much time on this, because at the moment you can see this is where the difficulty is. Although on one hand we are getting a hold up here near this 21-day EMA, but currently the price is getting held near this low of the 30th of July, near the which is around the 41.41 zone. So if this area continues to provide support, this low of the 30th of July, then maybe we could see a nice rebound and a push higher. However, we will consider the slightly higher levels only on a push above the 21-day EMA, and then we're not going to target very high levels here. We're just going to aim for the 200-day EMA here, shown as the yellow line. And as I said before, with the downside, the drop below the 41.41 zone could do the trick for more sellers. Ethereum is still stuck, so to be honest, not much is happening here. We're still waiting for a breakthrough, either the 390 zone here on the upside, or a drop below the 353.50 territory on the downside. A nice good drop below this could open the door towards a further correction here because don't forget that we're still trading above this upside support line taken from the low, the 13th of March. So keep your eyes on these two levels for now. Jumping into a few pairs, AUD JPY. So I talked about this pair this week, and initially this week I was telling you guys to keep an eye on this area right here, this 77.65 zone. I told you to keep an eye on it because we needed a break of it first before we could aim for some higher levels. Until then, kind of was saying that don't really wait for that move before kind of, let's say, targeting some higher levels. And you can see the reason why the pair started drifting back down. It fell back below the 21-day EMA and is now very close to this key support zone, after a break of which we could consider maybe a larger move lower here. So this level here, the low of the 9th of September, or in other words the lowest point, the current lowest point of September, near the 76.12 zone right here. In order to aim for some lower levels, a drop below this area is required, so keep your eyes on that one, guys. But at the moment, like I said, it's very tricky. Don't rush into anything yet here, because what we don't want to see here, this is that this pair, so that this pair would start moving sideways here. So yeah, that's what I'm saying. Wait for that confirmation break. USD Cad. Now this is where, as I showed you, that the dollar is getting a boost right now. So you can see that the pair is making its way higher. And yesterday and the day before yesterday, I told you about this one, and I was telling us that not all is lost here for the bulls, and this is exactly what's happening. So the pair is popping above this at least trying to move above this 1.3240 zone, and if we get a nice push above this, then a further push above this, then of course this opens the door towards a slightly a slightly larger correction to the upside. So because don't forget that although we've managed to overcome one downside line, we still have another one right here taken from the high of the 31st of March. So still this move higher could be considered as a temporary correction, so keep your eyes on that one. But for now, if we get a nice strong move above this 1.3240, then yes, like I said, keep your eyes on some of these higher levels, like for example 1.3314 or even the 1.3460 zone right here, marked by the high of the 30th of July. GBP and ZD. So this pair is moving higher. And this is what I was talking about yesterday when I was covering GBP and ZD, and you can see that the pair, yes, although it is making its way up, it still is trading below this downside line taken from the high of the 21st of August. So in a way, if this downside line does provide resistance, another round of selling could be possible. For those who are more on the cautious side, you could just wait for a move below this 1.91 territory in order to aim for further declines, because such a move would confirm a forthcoming lower low. In terms of the upside here, now previously I talked about this 1.9645 zone, but to be honest, it could be a bit of a wait here until we could get some sort of a move above it. So basically we could be missing out here. So that's why probably I'm going to say that keep your eyes on the 21-day EMA here, shown as the yellow line. A nice good push above it may open the door towards slightly higher levels. Euro GBP. Now this one is an interesting one, very interesting one, and in the beginning of this week I covered Euro GBP, and I was saying that if this after kind of the pair found resistance near the 0.92 zone, it started correcting lower, which was fine. It was a healthy, nice correction, but what I was also saying, that if this area right here, the highest point of June, will provide support, and this level is near the 0.9175 zone, if it provides support, then we could see a nice rebound and a push back to the upside. However, if it starts dropping below the highest point of July here, near the 0.9148, now this is where it could become a little bit more exciting for the sellers. Of course, don't get me wrong, we're carefully approaching this level here, the high. Is that the highest point? The highest point of August, near the 0.9070 territory right here, which also coincides with the 21-day EMA. So basically, this is going to be a very nice level to watch right now. Most likely we'll get a nice test of it. But if this one provides support, now this is where we could see a bit of a rebound here. And in this scenario, if we get a nice rebound from this area right here, we're not going to drag this one way too much to the upside, maybe just back to the highest point of July first, near this 0.9148 zone, and then we'll take it from there, because if the pair manages to get back above the highest point of June near the 0.9175, then yep, good news, we could see this one continuing to rise here. But if it starts, if it fails to do so, then maybe we could see a reversal here and a move back down. But of course, all this what I just said will be in the event that this area right here, the 0.9070, does provide decent support. If by any chance it breaks, well, I mean, that's obvious. I mean, the move here will be seen to the downside, and yep, the next potential target could be near the 0.8975 level. So keep your eyes on that one. Currently, that level coincides with the 100-day EMA, but that might change later on. So, but for now, what we're looking here for is this potential little idea. So let's see if it works out. And finally, EURUSD. So this one, this is what I was talking about yesterday, guys, and I was telling you guys to keep an eye on this one because it was very tricky. So that's the reason, as you can see here, I had my upside scenario from this level, from this 1.1917 territory, and exactly why I was talking about this, to keep an eye on this short term, well, on this medium term upside support line taken from the low of the 14th of May, because if that gets broken, which it did, then yep, it could open the door towards lower levels. However, to be a little bit more on the safe side, a nice good drop below this 1.1753 territory would be needed in order to consider further decline. As you can see, this morning we already did have a break below this, but the bulls are really trying hard to lift the rate higher, back above it, and they're at the moment they're succeeding. But let's see if they can continue succeeding today, throughout the whole day today, and if we do get this daily candle kind of staying below this area today, well, I mean, guess what, lower levels could be met here, guys. But again, we're not going to drag this one way too much to the downside, just towards a few of these levels, like for example the 1.1570 zone right here, and that level marks the highest point of January of 2019, guys. So there we go. So that could be a nice target, but as I said, only if we see the daily candle staying below this area right here, below this 1.1753 territory, somewhere here. If the pair somehow sharply reverses back up here, breaks above this upside line, and pushes above the 1.1917 territory, now this is where we'll start looking at the upside again. So guys, just a quick, like I said, quick update. Tomorrow there won't be any traders espresso nor tea time. Later on today I will have the traders tea time, so join me today later on at 13:15 GMT. But for now, I really appreciate you joining all here, guys, and I really hope you found it useful. So I would say be very careful today, be very cautious, don't overtrade, have your stop losses in place, and yeah, everything will be fine. So have a wonderful day, everyone, and I'll see you later. Thank you very much, and bye-bye.